Erin Gibbs, we're always looking for the reaction and the opportunity. Let's take a look at hospital stocks. There are health insurer stocks. There are pharma stocks right now that are definitely on the move. Do you like that sector right now?
Yeah, honestly, Liz, even if we do have changes, and it's still really uncertain about just how much impact this is going to have, healthcare just isn't one of our favorite sectors this year.
Why?
It's just not going to be one of the big drivers of growth. Right now, we're only expecting about 3.5% profit growth for the healthcare sector. That's less than half of what we expect for the S&P 500. So it's growing at half the rate of the overall market. There are a lot better areas where we're really seeing improved profit margins, improved revenue, stronger growth, great dividends. And so I just feel there's a lot of risk on the table with healthcare, and you're not getting paid for it on the growth side.
That makes sense. I get it. What areas do you like then, if not some of the healthcare names?
So infotech, financials, and energy are some of the areas that have the strongest growth. We definitely like the infotech area. Some of the valuations have come down. Apple is one of our favorite stocks. Also, materials is a smaller sector, but still something else that could benefit from not only what we see as good double-digit private construction and infrastructure building, but also potential for public infrastructure. And so materials are another area we like.
Well, as there are a few successes here, certainly through the House and healthcare. John Oxford, you work at I believe a small or medium-sized bank at Renasant?
That's correct. We're a regional bank, about $8.8 billion located in southern United States.
Well, you know that President Trump has made it very clear he wants to get rid of at least some of Dodd-Frank. Which parts would you like to see just blown out? Because they have really swept small and medium-sized banks just along with a very, very tough tide of the larger banks that needed to be regulated.
Yeah, well, at the end of the day, banks just want to lend money, and especially community banks, to help grow the communities that they live in. And so we want to see what's in the Choice Act and see what's specific to the banks. Obviously, we would like to see some of the $10 billion thresholds raised up for the growing regional banks, and let the banks lend. I mean, there's basically, if you're going to regulate community banks like the larger banks, that's basically the equivalent of MLB testing little leaguers for PEDs. I mean, there's really no reason to
Right.
look at the community banks the same way you look at a whole different level of player.
That's really hurt, I think, Lori, some of the small bank moves on the stock exchange. And when you look at what they have been held to, that standard, it's really kind of pushed them down below the waterline.
Yeah, the small banks and regionals, you should really separate from the larger banks, obviously, like JP Morgan's, which really are more sensitive to interest rate moves. We had the Fed the other day outlining a path for rate moves, higher rates more beneficial for the banks, but the smaller banks that do regional business, et cetera. And you look at the Russell, which measures many of the mid and small cap banks, the Russell's been very sensitive, obviously, to the success, the step forward and the step back with the Trump policy.
Erin, give me your side window trade. If you have some dry powder, what are you taking a real risky chance on?
Going back to construction, Eagle Materials, it's great double-digit growth, one of my favorite stocks.
Yeah, and it could do very well when it comes to infrastructure if we ever see that passed.